Some of the biggest growth industries in the world with massive multi-decade tailwinds include renewable energy, artificial intelligence, and the cloud. At the same time, the renewable energy industry has been a really hard place to invest for investors over the past 15 years or so. However, there have been a few companies that have done really well and made investors a lot of money. And one of those companies just signed a landmark deal with one of the biggest companies in AI and the cloud, one of the biggest companies in the world. That's Microsoft. I'm Jason Hall. This is Investing Unscripted. In this video, I'm going to explain why you should invest in this high yield stock that's going to be powering Microsoft's AI and cloud future. Before we get to the details, though, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you should go to our special link. You see it right there on the screen. It's easy to get to. Go to fool.com/unscripted. Again, that's fool.com/unscripted. In addition to the great stock that I'm going to tell you about right now, go to that link and the Motley Fool is going to give you its 10 best stocks to buy right now, absolutely free. Go check that out. Okay, let's get to it. Here's the press release that came out on May 1st, and it came from Brookfield. So Brookfield is the company behind this massive deal to deliver over 10.5 gigawatts of new renewable energy supply, mostly in Europe and North America. And it's basically going to be powering the massive amount of data center expansion for artificial intelligence in the cloud that Microsoft has, in addition to efforts that they're continually making to move away from energy that comes from hydrocarbons. Now, I want to try to put some scale on this deal. It's a 5-year deal to develop that 10.5 gigawatts of power between 2026 and 2030. Is that it's going to be an even longer term deal than the next 5 years. They're going to develop these assets over the next 5 years, but then they're going to be generating power that Microsoft is going to be using for decades beyond that. Now, context, 10.5 gigawatts. This is easily the largest corporate PPA that's ever been signed. According to the press release, they're saying it's almost 8 times larger than the largest corporate PPA that was ever designed before that. So it is an absolute massive deal. Now, I want to put it into some context on what it actually means in terms of what Brookfield Renewable, that's the Brookfield entity that's going to actually be doing this development, is going to be the operator of these assets. Put some context around how big this deal actually is. So right now, Brookfield has just over 33.5 thousand megawatts of total operating capacity all over the world. This deal alone is larger than all of its power assets in Latin America, and it's larger than its Asia Pacific and Europe power production assets combined. It is a massive deal. Again, it's a little bit more than half of its existing North American footprint. So again, we're talking about an additional 30% more capacity than Brookfield Renewable currently has. It is a substantial, massive deal. Now, you may be thinking, well, if it's this big, it's probably really good for Microsoft, but is it really going to be a good deal for Brookfield? And what you have to understand about Brookfield, if this is a business that has made its living for decades being incredibly good capital allocators. They generally don't sign bad deals, and they make sure to create value for the investors and shareholders that own their business. It's a really great track record of results that they've delivered. The Brookfield entity that's going to be most involved in this is going to be Brookfield Renewable. They're going to be the ones that are involved in developing the assets and operating these renewable energy assets after they're brought online. And I think it's one that investors are set to profit from the most. I want to share another screenshot here. This is the performance of Brookfield Renewable as an investment over the past decade. You see the kind of purpley blue line. That's Brookfield Renewable back from the beginning of 2014. And you can see for much of that period, the stock outperformed the S&P 500. I want to put that into some annualized data terms as well to make it kind of more useful. It's generated more than 13% annualized total returns over the past decade. Now, that's even with this big sell-off. So we saw this huge run-up during the coronavirus pandemic. And frankly, for a lot of this period here, the stock got way overvalued. Now, fast forward to where we are now, and I think the stock, even with a pop here more recently, partly driven by the news of this Microsoft deal, I think the stock is still, if not undervalued, which I think it is certainly very attractively valued at this point. One of the things that brought the stock price down so much over the past couple of years is the spiking of interest rates. Because bottom line, it takes a lot of capital to develop these big renewable energy facilities. And businesses like Brookfield Renewable often use a pretty substantial amount of debt as part of their funding for that. Well, with interest rates higher, harder to get higher rates of return. So the market has been certainly really concerned that these higher interest rates are going to weigh on Brookfield Renewable's ability to generate high rates of return. I, for one, am less concerned about that. Brookfield entities have been around for many decades. They have a great legacy as really skilled capital allocators. It's really deeply enmeshed in their corporate culture. Under Bruce Flatt, who's the CEO of Brookfield Asset Management, Brookfield Corporation, I believe deeply that their corporate culture and the training that they put their executives through is really heavily focused on creating value for its investors, making disciplined capital allocation decisions. And I don't think that they're going to throw that out the window just because they got a big deal from Microsoft. Now, one other thing that I want to point out is that I think that this does make it very clear that the renewable energy industry is not dead, not even close to it. The tailwinds are still incredibly strong. We're seeing lots and lots of businesses out there that do have it as part of their mission to reduce their climate impact, to reduce their carbon footprint. Microsoft is certainly a company that's going to be increasingly a larger consumer of electricity. And they see it as part of their mission, part of their responsibility, their corporate obligation to be responsible about the emissions that are produced from their electricity consumption. The company is massively profitable. So they're not just living on the edge of some social justice mission here. This is a profitable business that's making profit-driven decisions too. They also know that renewable energy can be very cost-effective for them. Solar and wind can be cheaper, and in a lot of cases are cheaper than even the cheapest natural gas power production out there. And as we see more energy storage come online, it's making it more applicable to usage of power across across usage patterns. It's becoming less of an issue that wind and solar can't be counted on as baseload because battery costs are falling, battery technology is improving, and wind and solar are starting to be able to apply to more and more of the energy market. Okay, let's wrap things up here. So again, we see this massive opportunity. This is a substantial deal. It indicates that, again, not just a big deal that it's doing with Microsoft, but it indicates that there's still a massive amount of tailwind that's going to continue to drive more and more demand towards renewables. Brookfield Renewable is one of the world's leaders in this space, a great developer, a great profit generator, and has done a wonderful job creating value for investors for a long time. The dividend at recent prices is still around 5%. So you're getting a really solid yield. But of course, the yield only matters if the dividend itself is sustainable. And it's not just sustainable for Brookfield Renewable, but I think their ability to grow it is peerless. Dividend over the past decade is up about 106%. So even if you look at it and say, well, hey, I can get 5% in treasuries right now, you know what you can't get? You can't get payout growth with those treasuries. The reality is that the yields that you're getting on cash treasuries and money markets right now is more likely to fall in the next year than it is to go up. With Brookfield Renewable, you can lock in a 5% yield now, and then your yield on cost as they raise the dividend on a consistent, regular basis is more likely to just go up and up over time. Put it all together, again, thinking about those trends, thinking about owning best operators out there, great counterparty, comfort with a business like Microsoft on the other end that's going to be driving a large part of its growth over the next half decade. And I think Brookfield Renewable is absolutely a buy, whether you're looking for growth, dividend growth, or high yield source of reliable income. I think it should be at the top of investors' lists of stocks to buy right now.